I'm not going to get caught being overly bearish when I love cryptocurrency, and I think it's probably the greatest asset to appreciate still, even at today's date. I mean, it falls by a lot of percentages and it's very volatile, but I'm pretty sure everybody kind of knows that it's high risk, high reward. So I'm not going to get caught being overly bearish. That's not the way we're going to move here. Now, I've been saying in a couple of videos that I think Bitcoin's going to 20K. And although I am leaning towards this as being probably true, I want to study the bullish side. A lot of people watch my videos, maybe because I'm passionate, maybe it's because of the way I say things, I don't know. And they think that when I say something that it's just engraved in stone, and then they don't come back. They watch one video and then they don't watch any for 3 weeks. And then they're like, Alex, you're wrong. And then they point the fingers because I said something in a video. But what you guys have to understand is that it's a day-to-day thing. Every single day, there's new information to consume and there's new information to process to weigh out the pros and cons of every situation. So this is a video attempting to try to show the bullish nature of crypto. Because remember, guys, crypto still has been the best appreciating asset class out of anything else in the world, right? Crypto still, even after the 2020 crash, appreciated by more percentages than any other asset class. Bitcoin, total market capitalization, S&P 500. I don't care what you look at. Even though crypto has massive crashes, it has massive pumps. So I don't want to get greedy in the fact of me trying to find crypto for the perfect cheap price and miss the boat potentially. So I'll be weighing out the pros and cons. This will be a slightly bullish video, although I have not entered back in the market and I still think it's more likely that we come to 20K BTC. I still think this is a thing. I don't want to point out the obvious, which is no matter what you look at in the world, when it comes to asset classes, there's really nothing better to invest in, right? Even if you realize, or not realize, but even if you hold through these 98% dips, most of the time you're going to be okay. Ethereum dropped 98% last cycle. If you would have still held, you'd still be in profit right now. Even if you held all the way through last cycle, and this massive volatility, you'd be good. So again, I'm not going to miss the boat, and I want to update you guys in real time as I do it. So this would be a slightly bullish video, even though I have not accumulated crypto yet. I want to look at the other side, and I don't know, maybe you guys can help me. Actually, I think it could be very productive if you guys drop some comments below of what I should be looking at for the bullish case. Let's look at the bullish case. Let's go against our emotions. Although I think Bitcoin's going to 20K, and there's a lot of reason to believe that, I want to go against my human emotions by trying to find contradictions in what I'm saying. Right? The gist is, I'm a trader. And this is how it kind of works. It's one day I'm bullish. Not one day. I was actually bullish for a long period of time during the bull run, and then I turned bearish, and then maybe we found the bottom. And there's these questions you got to ask yourself every day. It's a consistent thing. You can't just make one decision. The one decision, if you want to make just one decision and not look at the market, then the decision is you should just hold crypto, because overall it works, right? But if you're trying to cash the bottom, trying to get some cheap Bitcoin cryptocurrency and do these things, then yeah, your decision-making process will change likely. All right, so I saw this, and I talked about this in my last video, guys. Please refer to all of my content. Please do not just look at one video and hate me or love me. Because of one video, you have to consume everything I say. I really, really hate it when people try to isolate things I say. It doesn't really work that way. Life has context in multiple dimensions. But if you look right here, we're looking at a top 100 altcoins versus Bitcoin dominance. Now we see this breakdown, and obviously this is bearish, right? This trend line we've had here, or the support we've had here. But if we look at the ETH BTC, we did have a little bounce here. Now, maybe we continue higher, but this would be bullish, right? So if Ethereum still showed signs, right, or whatever, still showed signs of destroying Bitcoin. Now, what we're looking at, just to be clear with everybody, is ETH versus BTC. So from my last video, hopefully you've been following what we're doing here. When this goes up, Ethereum is doing better than Bitcoin. When this goes down, Bitcoin's doing better than Ethereum. So this going down is indicating that the cryptocurrency market is risk off. if the cryptocurrencies market is risk off, usually that happens in bear runs in crypto. Usually people confide in Bitcoin in bear runs. So, if I was, talking yesterday, we saw this very similar here. We're looking at the top 100 altcoins versus Bitcoin diamonds. So the only difference between these two charts is that in this chart, we're comparing the top 100 altcoins. In this chart, we're comparing Ethereum. So in this one, the altcoins are breaking down. So this is showing a sign that cryptocurrencies risk off right now. Everybody's, moving risk off, but this is also showing some, support here. So, well, again, like I'm trying to give you guys a bullish case. So the bullish case would be is if we bounce here and Ethereum starts to, increase higher than Bitcoin, this would show signs that people are taking a little bit more risk and they're okay with holding Ethereum over Bitcoin. I would like to see it here too, though. I would like to see it here too for me to get a little bit more bullish, but at least now you know what to look at when it happens rather than, waiting for somebody to drop content, edit the video, et cetera, et cetera. I try to give you guys the indicators that I look at ahead of time so you can make your own decisions. This is the whole point of what we're doing here. So please pay attention. Also, we did come down below, 30K and we wicked down to 25, 26K, but we've been kind of holding that 28K level, pretty consistent. So the bullish case scenario is bouncing from here. So it's really only two situations. It's like we bounce now, and we start moving our way up, or we go to about 20K BTC and then reevaluate. So that would be the bullish case scenario. Now, another thing I've noticed, and this is all very short term, just to be clear with everybody watching this video, it's very short term, guys. Things can really flip around, and this is why I'm letting you know of the indicators so that you can watch it for yourself. But if we look at the DXY, which is the US dollar currency index. Now, if you've been watching my macro videos, hopefully, I know there's some new subscribers here, guys. Please go watch the macro videos. Go watch like the last 10, 20 videos. And the reason I say this is because a lot of this information is going to be relevant to this video here. I'll try to explain it very briefly to you, but really, I've dove really deep into the macro environment, and it'll give you the best explanation if you do that. But the US dollar currency index is basically signals the strength of the US dollar. Now, if you understand how macroeconomics work, it's basically hawkish and dovish. Dovish is increasing spending or printing money to stimulate the economy, and hawkish is decreasing spending to lower inflation. Now, right now, we are basically in hawkish territory. The Federal Reserve is moving in a hawkish way to lower inflation because inflation got a little scary. It was about at 8.5%. Now, usually when this happens, other parts of the world start feeling the effects because if you understand how the economy works, the Federal Reserve is at the top. So the Federal Reserve basically makes decisions to try to save the United States, but as they do that, other parts of the world, feels the effects way worse. So what people in Venezuela and other parts of the world, what they do typically is, their inflation will increase if the United States goes hawkish. So they'll typically buy USD. It's a weird thing, but they'll buy USD, and we know this for a fact. They'll buy USD. And the value of the dollar will increase and inflation will decrease. So this chart went parabolic. And when it went parabolic like this, you can see there's actually a curve there on the weekly time frame for the US dollar currency index. You can clearly see, okay, a lot of people were buying cash or US dollars, USD, because they know that the government was going to decrease, inflation. And basically the whole point of hawkish Fed policy is to try to nurse, all of the negative economic conditions happening specifically in the United States. So everybody kind of jumps to the most powerful dollar. That's what basically happens. All the weak countries, they jump to the most powerful dollar. And that's what's currently happening. And you can see the, value increasing. Now, if we continue higher, this would be very devastating for risk on assets. Typically, when things like this happen, risk on assets like stocks, cryptocurrency is obviously considered risk on. When things like this happen, that's where we see the stock market dumping. So, a lot of people have been saying, hey, DXY, if we can get this to move down here, right, if it comes down, this will actually be very, very bullish for Bitcoin and cryptocurrency as a whole. And we did just come up on some resistance here. So as you can see clearly, this line of resistance here, we did come up, and on the weekly, it's breaking down. Now, again, you guys, I just want to give you my official decision. If you look at this at the long-term time frame, we've been on an uptrend all the way since 2008, which is a big financial historical event. I'm sure a lot of you have heard of the housing market crash. Pretty much the whole world pivoted, and you can clearly see that when the housing market crash happened in America, it was almost like the DXY just continued to increase. So I think it's just more likely that we will come up to here and then we can reevaluate. But the bullish case would be if the US dollar currency index did break down, right? If it broke down, this would be a good indicator for all risk on assets, including stocks, and cryptocurrency would definitely fall into that category. But yeah, so now you guys get it, right? DXY, look into it, right? Start doing some research for yourself. Ask other people, what they think about the DXY. Go look into some macro economists that are way smarter than me about macroeconomics. What are they talking about DXY? I really, really want to promote this education mindset because although it can get like a little bit out of control, I don't want to lose grips on what matters the most. Ray Dalio specifically, actually, in his book, he said that the leading indicator for a country to take over, another country when it comes to powers, right? Because the United States was not always the most powerful country on earth. They just recently, in the last 94 years, but in the last 94 years, that's when their power came into dominance. There were other countries that were more powerful. And there's a lot of people that say that China is now becoming the most powerful country. The leading indicator, the one thing that will give this country, the superiority is education. It's very clear too. The countries that spend more on their education usually derive more innovation. The more innovation in a country usually drives more power, and then ultimately, they'll bypass another country. So, you could think about that on the macro level and the country level, but I really want you guys to think about that on a personal level because it just holds so true. Like, there was a time in my life where I was consuming like 2 or 3 books a week, and this was like the greatest growth of my life. And then, when the bull market came and all of these distractions and me having to pump out videos and, all of these things that happen with this whole exuberance, like nobody is safe from it. I just want to be clear with everybody. Like, you're going to get distracted when the bull run comes, as well as you're going to get scared when the bear run comes. It's just the way it goes. I don't care how many times. It's just how well are you or how able are you to control your emotions is the only question. So when the bull run came, I really actually stopped my reading habit. I didn't stop completely. I was still reading a little bit, but it was just more of like articles on the internet, and I wasn't educating and learning new things, right? As aggressive as I was last bear run. So for yourself, like, guys, leading indicator, educate yourself. I will always be pro crypto, of course, but I'm more pro education. If you guys really understand like how I move, I think crypto is the biggest foundational shift in mankind in the last, 100 years, probably even more than that. And this is why I'm here. But really, like, there's just much more to it in my life, at least, and when I capitalize on this cryptocurrency market, my goal is to do much more ambitious things. But yeah, education is just consistent for me. No matter what I do, always when I come back to education, read books, learn from other people, I always do better. It's the same for countries, and it's definitely the same for you. So, a lot of this information is going to be contradictory sometimes, and maybe I might be bullish one time and maybe I might be bearish, but the whole point is please just learn where I get these indicators from and learn how I use them. That's the most important thing by far. I'm trying to plead with people here. Please learn. If you don't learn, you don't earn. And it's so stupid and corny at this point because everybody says it, but there's a reason why everybody says it. Not only that, but it's, guys, like the simple things that just really work, man. I don't know how else to explain it to you, but just the simple things that just like hard and suck always work really well. They just do. So if you want the guaranteed strategy to make $1 million, like just do the hard stuff that nobody's willing to do. You should literally go to your friends and be like, hey, let's read this book. And as they give you pressure against it, you should just do the exact opposite of what your broke friends do. If you want an indicator of how to make $1 million, do the exact opposite of what your broke friends do. If your broke friends go party on Fridays and Saturdays, you stop partying on Fridays and Saturdays. If your broke friends want to drink alcohol on a regular weekday, whatever it is, you get the point. Like, nobody wants to read. Everybody hates reading. Let me just, like, it's so crazy. Everybody hates reading. Everybody hates finance, right? So like, get your together, man. I'm trying to push you guys as hard as I can. Now, something else you can learn is the USDT dominance chart. This has been mostly adopted. And actually, I'm being a little bit biased here. Let's look at the USDC dominance chart, because as I showed in the last video, this is actually getting a lot more adoption. So maybe it's a better indicator. And I think that's very interesting that I'm actually pivoting right now and realizing this like literally right now. So, we have this resistance here. It's been playing out, so we'll see how it works out. But I guess the bullish case would be if we reject, which we did here, and then we come down. If we come down, that means that people are getting out of stable coins, and specifically this would be USDC dominance. It's the same thing for USDT dominance, but as it comes down, this would be the bullish case. So if you can watch that, then we might see Bitcoin, Ethereum, and some altcoins start to do well. So in general, that's kind of just price. I just want to show you guys price now. Let's look at some on-chain metrics, because there is a bullish case to make here as well. So we have the Pure multiple. Maybe I'm saying that completely wrong, but I'm not going to edit this video. We are coming down to the green zone. And historically, if you look at the green zones, these have been very good opportunities to buy. So maybe it's not right now, but as you can see, we're very close. Even, in this recent dump in 2021 right here, as we can see the top here, we see, right, this green zone, as we touched it, we did appreciate by large percentages. We see it here in a 2020 event that I always talk about, that I don't want to say because YouTube's going to censor me. Green zone here, price went up. We see it here, last bear run, green zone here, price went up, right? And we could also see in the red zones that, it's good times to sell. We kind of just briefly touched it over here. But you see what I'm saying here. Green zone, bottom of the bear run here, 2014, 15. Green zone here, good time to buy. Boom. We're getting very, very close to that green zone. So maybe that happens in the next couple of days. Maybe it happens in weeks. Maybe it never happens. I don't know. But I will say that that's looking pretty bullish, and it looks like the bear run's kind of gassing out a little bit. Now, if you look at the fear and greed index, this is also something, it's a very good indicator. Maybe people have been talking about it, but we're like as low as you could possibly go on the extreme fear. So, when you're buying extreme fear, it's always been really a good way to invest in pretty much anything. And, people are getting really scared. We're at 13 out of 100. So again, maybe the market doesn't flip right now, but it just looks like from a lot of different indicators that there's kind of pretty good accumulation zones. I will say though, if you sold out of the market, maybe wait for it to come down a little bit more. This is what I'm doing. This is not financial advice, but this is what I'm doing. If you have not ever gotten into the cryptocurrency market and these new videos you've been watching, which I doubt, I doubt it, man. The newbies come in at the top. They don't come in at the bottom. But, if you're new to crypto and you've never bought crypto before, it actually might be a good time to maybe put a small amount in there. Usually what I do, and I've made these videos before, I actually got really, really, I wouldn't say famous. I'm definitely not famous, but I got popular in cryptocurrency for making these videos. But using a nice dollar cost average strategy, maybe let's say you want to invest $10,000, splitting it up into 5 equal distributions and entering the market, in times like this when there's extreme fear and the potential of the bottom being here is very high, right? Things like this. You get the point. Like, it might be a good time if you've never been in crypto to enter right now. Especially if you don't want to trade, and especially if you're new. If you're new, like, let it go. Buy a small amount. Buy a little bit more when you get down. Buy a little bit more when you get down. But I know my audience is kind of like a little bit advanced. So, you guys see what I'm doing. I'm going to wait for Bitcoin to get 20K. Now, also, if we look at Bitcoin's logarithmic growth curves, this is basically logarithmic regression, and it takes in consideration the law of diminishing returns. So it's kind of a good way, and it's not only used in cryptocurrency. It's used for a lot of things. It's actually used for like weather conditions, and logarithmic growth. It's just a good way to kind of predict the future, but it's not perfect, not even close. As you can see, although the top line has been touched here and here and here, it did not get touched in this cycle. And also you can see it broke below the yellow line here. So where we're currently at, we did break below the yellow line. So again, just another sign that we are getting just a little bit oversold. Right here. So, pay attention to that, and I always look at this to give me a little bit of confidence, because it kind of just shows it's not a perfect indicator for, perfect predictions, but it does kind of show you the tops and bottoms. It looks at the potential tops and the potential bottoms so that you can make your own choices, right? Now, I am looking at this article by Glassnode, and it does talk a lot about UST and Luna, but pretty much everybody in the market's talking about UST. I want to be not only different, but it just really does not matter. You know, you could look into UST all you want, unless you're like an arbitrage type of person or something. I don't see how it's relevant. The only thing that's relevant in my brain is that, you know, cryptocurrencies are centralized. We all know this. People run it at this point. The only one that's like probably truly decentralized is Bitcoin. Not only that, but they're also very fragile. You know, and obviously somebody has some type of interest to attack stablecoins and UST. So like these conclusions are drawn, but like I know a lot of people are going to the conspiracies to try to get views and stuff like that. I just don't think it's productive for investment. Look, it died. I don't think it's coming back. That's just the gist. And it took the market down with it. That was kind of the points I got from it. And it really just kind of, it's almost better to research UST and USDC. Like research those. Like spend your time doing that. You don't have to watch all the Luna videos. Maybe I'll make a Luna video, fine. But like, I know people have been asking me, but it's just like, I don't see what's the point of going into the conspiracies right now, at least. I think it's more important to kind of just like weigh out your investment decisions and macroeconomics. But yeah, whatever. All right. So basically, what we're looking at here specifically is relative realized loss. Now, it's kind of hard to understand. I'm going to try to break it down to you very, very simple. But basically, it's one of the oldest and most fundamental metrics on-chain analysis. It's calculated by dividing the realized market cap, which is the sum means like the addition, adding them all up, right, of all coin values at the time they were last moved. So for example, it's hard to explain this, but like when you buy a coin at 30K BTC, yes, you bought it at 30K, but let's say you never moved it until Bitcoin hit 60K, right? Well, then, you know, that realized price would be you kind of holding it as 60K, if that makes sense. So the whole point of it is to reflect an estimate of the aggregate cost basis of all coins in the supply. Because sometimes you'll have someone that, you know, maybe bought Bitcoin at like a penny and has never moved it, right? So it's just kind of very unlikely that he's going to move it. So, you know, the market cap is just a bad indicator. And this gives you kind of like a more filtered way of looking at, as you can see here, realized market cap, right? So it's dividing the realized cap. The realized market cap is just a very filtered way. You know, it just shows you kind of like a non-inflated number, because, you know, the market cap is just, you have to do your due diligence and understand what market cap is, but it's just a horrible indicator. And this just reflects a more conservative price, if that makes sense. If you don't understand anything I'm saying, and you don't understand, you know, reflects an estimate of aggregate cost basis of all coins in the supply, just understand it's just a better way of looking at it that will not overinflate the price of Bitcoin and cryptos, because there's a lot of crypto that's just sitting there. And, you know, it's just much better to look at who's moving it at the time, right? So if you're moving it at 30K BTC, then it's just like this aggregate cost basis. So very hard to explain. You should definitely research it for yourself, but it's just a better way of looking at it. And a lot of, you know, people I respect use this as an indicator. So basically, you know, we did just below, you know, the realized loss, relative realized loss. So there's a couple of times, and you can see right here that in the bear markets, there's kind of like this price peak, the MVRV right here. Being that the realized price is very conservative, there's actually some times where the actual price will get below the realized price. And in this case, you can see that this is typically signaling bear runs. So the actual price of the coin will sometimes get below the realized price. And this shows a lot of undervalued nature for Bitcoin, right? So as you can see here, there's a couple of bear markets, and there's been times where we've been below the realized price. You know, in 2011, we were below the realized price 114 days. In 2014 and 2015, we were below the realized price 299 days. And then 2018, 133 days. And then we just recently experienced, you know, being below the realized price for 7 days. So as you can see here, okay, we're getting right here, price equals 26,513, 9.5% off hitting realized price. So we're not below it, but the realized price right now is 24,000, and we got really close. So if we continue to go down and maybe we do get below realized price, this could signal kind of the end of the bear run. And what they're saying in this article is that, as you can see here, in 2019, 2020, we were actually, below it only 7 days. So maybe we don't even get below it, and maybe that was the bottom, right? So this is just showing this conservative perspective of realized price in comparison to the real price, right? Now, there's something else where it's basically just another indicator for accumulation trend score. It's just a score that they put on these accumulation zones. The chart below shows accumulation trend score, which will return values closer to 1 when large proportions of the market are adding to their on-chain balances. So, as you can see, we see a trend closer to 1. So it looks like a large amount of people are adding to their on-chain balances and accumulating. It looks like the bulls kind of stepped in to stop the dump at 26K. And on-chain metrics, I love them, but they typically take a little bit longer to play out. So take everything I'm saying with a grain of salt. So the gist is from Glassnode is they're kind of saying, in the conclusion here, it remains to be seen in a full return to the realized price is required to put this bear market to rest. And if so, whether it is for months, weeks, days, or a short moment, perhaps those days are behind us. If the accumulation we observe is indicative of the support the bulls are willing to put up in the 20Ks range. Note, there remains a plethora of macro inflationary and monetary policy. The gist is, we could get below the realized price, but it probably won't be for that long. Maybe the bulls step in. That's the gist of what they're trying to explain. But there's also, of course, macro conditions and all these things that they're not taking consideration. They're just only taking consideration on-chain metrics. So that's the gist there. Glassnodes is a very good software, in my personal opinion. We use it a lot. Now, don't forget. Now, this is like a really good part of the video. I want you guys to really pay attention to what's going on here because, again, bullish case scenario, right? Bullish case scenario, let's not get too bearish. I do want to show you these two charts. Now, the first chart here is a total market capitalization of all crypto. So this is every cryptocurrency accumulated in one chart. And then the second chart here is the S&P 500 is basically an index of the top 500 companies accumulated in one chart. Now, the beauty of this is that I want to show you guys, and they kind of said this in the last article here, the dump was very similar to the COVID 2020 event. It was very similar to some bear markets here. So if we look at the last 2020 event, which was like really scary for us, right? This is when like things got really scary. You could see that there was a 64% decline. This was in 2020. You could see this was right here. This was that big event everybody was freaking out about. And if you don't know about it, you should definitely do your research. But right there, specifically, when we had this big sell-off, the total crypto, all of crypto dropped 64.64%. Now, if you look at the S&P 500 in stocks, it dropped 35%, right? So this was like a massive crash, similar to what we're experiencing now. Massive crash. Ours was fueled by UST and maybe the stock market was fueled by hawkish Fed policy, but this is a massive thing, right? And right after that, all of cryptocurrency went up 2,500%. That's an index, guys. That's not like one altcoin. That's the index of all crypto went up 2,523%, right? Now, the S&P 500 only went up 119%. So I think that's the gist of the bullish nature of crypto. Regardless of what price you get it at, like, depends on how active you are. I'm very active in crypto, so I'm comfortable with taking my money out of the market and buying when it gets cheaper. But if you're not comfortable with the market, if you haven't been doing this for a long time, like, it just really does not matter where you get crypto at. As long as we are below in this bear run, you could buy at any price. And if you wait long enough, you're going to see massive growth in crypto, and this has been consistent since it started. So that's kind of the gist of the bullish case. That's kind of the gist here, guys. Don't take your eyes off the prize. I am trying to catch the Bitcoin bottom, don't get me wrong, but I'm not going to let it, I'm not going to miss out. If we reverse now, I'll jump back into the market, and I'm cool with that, right? And taking a small loss, because at the end of the day, look at that. 2,500%, guys. That's huge, right? So this is the gist. Don't take your eyes off the prize. I want you to see every perspective, depending on if you're a new person or an expert in this market and you've been watching my videos for a long time. Guys, just crypto is just the best for sure by percentage increase over time. So at the end of the day, where we're at now is a good accumulation zone as well. It could be a good sell point. I sold when Bitcoin was at 2,000, I sold some altcoins, but I'm cool with buying, now below, it doesn't really matter. I'm just trying to milk it for everything I got, if that makes sense. Now, if we look at what's going on, we do have growth all over crypto. I've been kind of talking about it in multiple videos. Aave launches decentralized NFT-based Twitter rival on Polygon. We see Binance adding support for layer 2s. This is actually really interesting because, I used to have to take my money off of a centralized exchange, put it into Ethereum wallet, and then bridge it over to Polygon, and then I could do trading on Polygon. But now I could go to Binance and take cryptos directly off of Binance straight to the layer 2 Ethereum scaling solution without having to bridge at all, and then get this really cheap transaction cost. I think that's actually kind of outstanding, and it's really, really cool, and everybody should pay attention to what's going on here because that's a direct off-ramp onto a scaling solution. Guys, look, we're looking at Robinhood adding DeFi. We're looking at Coinbase adding DeFi. Like, what's going on? It's almost like I was moving a little bit too ahead in the future, man, trading on this Web3. I've been trading basically this whole cycle, I've been trading Web3. If you guys didn't know, if you've been following me in my journey, I have not really used centralized exchanges. I've been using Uniswap. I've been using, SushiSwap. I've been using all of these decentralized trading, which maybe was expensive for me, but I could see very likely that next cycle will be like the normal person will be trading the way I was trading in 2021 and 2020, of course, like this cycle, which will give me a 4-year advantage over everybody. Because even like I was Web3 trading, but there's just so much to it. Like I still don't even know. And the next like 3 to 4 years, as we go through this bear market, or 2 years or whatever the time frame is, I'm going to learn way more about Web3 trading. So I highly suggest, even if you don't buy crypto, you could put like $10 in and use some of these layer 2 solutions. It's probably the best learning experience you will ever get, better than any YouTube video or any article you could ever read. Actually trading on Web3, learning these omni-channel wallets, right? Understanding what MetaMask is, understanding what DeFi is, looking at automated market makers, diving into DeFi on a really seriously like decentralized level, and getting away from the centralized exchanges, taking your money off of centralized exchanges. I've always preached this, and that's the reason I was a Web3 trader, is because if it's not your keys, it's not your crypto. If it's on a centralized exchange, I hope you guys know that they could technically take your funds from you if they get hacked. People don't get this, but it's very true. So you have to have the real custody over your coins. And the only way you can do that is if you get into a Web3 wallet. So I just think it's very interesting that we're seeing this support happening now for Robinhood, as well as, a couple of other apps that are big. Like, think about that. Robinhood is adding DeFi features. That's insane. And I could really see a trend next cycle that everybody's going to be on Web3. Next cycle, everyone's going to be on Web3. And you could have a big advantage if you go through the bear run using these products and services. Now, we see the Ethereum merge coming in August, right? So the gist is, I don't want to talk about specifics because it's pretty much irrelevant. You can read into it for yourself, but we see the growth happening, especially now that the market's kind of settled down and quieted down a little bit. We see the growth happening, and you can see that from the numbers here. People, retail has left the market. This is Google Trends. We're looking at the NFT search term, Ethereum search term, Bitcoin search term, and the crypto search term, and you can see that, we're pretty much, we had this little spike here, but we're at the bottom of it. Retail has left the market. This is your time to take advantage of everybody that didn't want to stick it out. Everybody that, is doubting crypto now and making fun of people for even talking about crypto. I literally see jokes on the internet now. It's absolutely, it's actually hilarious because, man, it's just a beauty to really experience things because, you guys hear me saying it, right? I say, everybody's gonna call me a scammer in the bear run. But like, I literally saw this happen. This is like my third time seeing people do the same thing over and over again. Human nature is so funny. It's so funny. Everybody wants to get involved when all the hype's here. But when everybody leaves the market, everybody wants to make fun of the people, and the negativity sweeps in, and I told you so, starts sweeping in. This is where you win, man. Go against normal human nature, go against the normies. You should look at your broke friends as an indicator of what not to do. Never take advice from somebody that does not have what you want. It's as simple as that. If your broke friends are pressuring you into getting out of crypto, guys, like seriously, like it should be obvious for you at this point. It should be obvious. Hopefully, if I did anything right and try to educate you guys on cryptocurrency and entrepreneurship, hopefully you know that when your family and friends tell you not to do something because of whatever risk they want to make up in their head, then this is when you should do it. Hopefully, I've convinced you guys enough to do the exact opposite of what everybody else is doing. This has been consistent through my time that if you do the hard, risky things and you take it very serious and you stop following the normal crowd, the matrix, the normal crowd, go look around you, look at these people, they're zombies. They're zombies. They're not taking action in their life. They worked so that they can go on the weekend and hang out with their friends. This is their satisfaction. Their satisfaction is drinking alcohol and smoking. That's their satisfaction. My satisfaction is trying to take over this entire market and set freedom for the rest of my life and my whole entire bloodline. My goal here is to set everybody free that I know. And I cannot do this unless I do what everybody else is not willing to do. It's literally as simple as that. So hopefully I help you guys with that. That's it for this video. If you like the quality of this content, hit like. If you don't, leave some constructive criticism. Subscribe for more video updates. And like I always say, if you don't get with it, you will get left behind. Thanks for watching this video, guys. Catch you in the next one.